Good morning, everybody. We got a gap up here. It's starting to fade. You can see on the spiders here is that beginning to pull back a bit, which makes sense. Yesterday was the Fed announcement, as everybody knows, and it was what was anticipated, and now basically green light, nothing to worry about until the end of the year. I think at this point, I guess you got to take seriously any new variant, COVID, and so on, because the market reacts to it. Like people are, lying all over the streets dead, which hasn't been the case, but the reaction is so violent. In any event, just looking at things from the perspective that we always do, we've got a trading range now, and we've got a big dip down, that whippy price action that then recovered on news, and then the dip in the rally day, which went straight up. Well, first it whipped down for good measure, which it typically does, and then straight up, and now it's gapping. It just cleared the top of that pivot high over there, where it came for almost 475. But taking out a prior high, what we call a greater than 100% retracement, is a point at which it's to be cautious, because historically a move like this, and it keeps going up, it takes out the prior high and prices come in. It's just your typical price action that occurs on a regularly consistent basis. So again, trading range, taking out the top of the trading range, what does that typically lead to? Well, it typically leads to some consolidation. We're into the end of the year. Whether there's some profit taking, which is mild at the moment. Generally, institutions are not going to dump stocks. A lot of things other than what has been the few big winners out there, obviously Apple and Microsoft and so on. They may actually go higher. And a lot of things that were winners, whether it was the Tesla or DocuSign or so many other things, just were beaten down. And so you had this bearish undertones within the market that were just beating things lower. And so now looking at some of the things that are lower. So one of the things I looked at and said, well, let's see if this can get going. A lot of the transport stocks to play catch up. And while a lot of them don't really look so great, maybe, a lot of things that are pushed down don't look so great where they start to make a turn. But one that I looked at last night was that showed some life on after a pullback was FedEx. So maybe there's these pullbacks. There's obviously the airlines and the cruise lines to see if they play some catch up. But as far as the market goes, gapping up here, it's coming in a bit. You can see the spiders where they were going sideways, and it'll become clear on the futures, and it just shows the open of this bar, and it's coming down to there. So a more significant level would be, I would say, like, $470, which lines up, give or take, with the S&P at 4,700, which was a big sticking area, and brings us to, concepts. What was resistance becomes support. And so we'll see as it is pulling back, looking at SPX, based on where SPY is, and it'll open up somewhere around here and gap up right into a prior topping tail after a big run, which leads to at least a thought initially of a gap fill, and coming back down and filling the gap where buyers should be lurking. Now, thing to be aware of or thinking of, we have to look at that and say, let's see if it pulls back over the course of whatever, 20, 30 minutes, assuming it doesn't just gap up and crap and come down huge in one big 5-minute bar. it comes down in a controlled way and then begins to turn, should set up buys. Now, that said, the way it went up yesterday, a buying frenzy leaves little to nothing down below. So it could be a bit tricky, based on that. Nonetheless, looking at the weekly chart, we've got this whipsaw, putting that in context of the bigger picture, which helps things make sense. When you look at smaller time frames that are erratic like this, or make giant moves in the smaller time frame, when you move to the higher time frame, it should bring clarity to what's going on. Right? So what we have looking at that is a trading range, right? Within an uptrend where things whipped down and they whipped right back up again. This week so far has been a consolidation week of the prior week's gain. And this price action going on right here is just, a detailed part of that consolidation, which the assumption is that it continues, right? Tomorrow's Friday, maybe it continues. And now we have, but this didn't clear the highs. So it's not your textbook 1, 2, 3, but we've got a wide range bar. There's a big momentum day. We've got a consolidation week. Our MTS concepts, apply to the time frame that we're looking at. And that says when we get a big wide range bar, we want the open and close to stay in the upper half and ideally in the upper third. This is right at the top of the bar, assuming, it closes up here. And we've got a tail, which can go down below 50% being a tail, but the open and closes we want here. So this all looks constructive from this higher time frame, which is happening in the area of this prior high. So that being said, it should lead, assuming it closes something like this, should lead to us having either, hopefully not another consolidation week next week, or it takes out this high on its way to 4,800. But right now, we've just, this crazy price action is a consolidation after a big up move, right? So looking at the futures, you got similar, we see the actual move and it took out the high. It's right at here, as it took out this pivot high and it's coming in, as you can see, it's just pulling back and we've got this relatively significant pivot low here, that first pullback. Obviously, the selling has continued beyond this little congestion, and we'll see if it begins to hold here. As you can see, this bar here has got a minor tail, so possibly, buyers are stepping up there. Whether they can hold it, let's see if it takes a little bit more. But yesterday's close is down here around 4,700. So if the selling continues, and looking at the spiders opening up where they would be, and they continue down, and this, continues coming down to the area of, come on, move for me, 4,700 area, give or take. You got this wider congestion here. Buyers should step up there pretty aggressively. I think, that's what should happen just based on looking to the left, because if they don't, it opens up the door to giving back yesterday's big monster move. And you see the pivot low there on the 60-minute chart. So should this continue to pull back, around 4,700 is where buyers should step up, looking at SPY 470 gap fill. Buyers should step up there and hold it, and then we see how far it goes up from there. Right? Qs not as strong, which they have not been. They're well below the all-time highs. They hit this congestion area there, and you can see they're backing off as well. Their significant pivot. Well, it's not a pivot. It doesn't have 3 higher lows to the left. That being said, we have to bring some common sense to our method, and that prices can form in an endless number of ways, but I see a pullback here and then a turn. And while it's not marked as a pivot on a lower time frame, I know very well it's a pivot, and these overlapping bars here are going to be where buyers need to step up to hold this. Otherwise, again, it opens up the door to no man's land. Right? There's nothing to stop it from going down. And this, we just look at that as, well, being what minor support is subjective. Prices traded down below, traded up through it. And what's relevant is what is directly to the left. And whole numbers, not really, so buyers are going to need to step up here and defend this. And, if they hold it in this area, give or take, and consolidate it a bit, maybe tomorrow will be the continuation of the rally. The further it moves down into the green bar and closes into it, the more damage is being done. And it's more common sense. It should hold up in this area, even the subjective reference point like the 20, which is, if you look at the hourly chart, it's in the middle of nowhere. But whether it's a moving average or a trader pivot line or a fib line or whatever, that's all subjective information that we put on our chart. There's no price support, but buyers using something subjective could hold it there. So, the gap fill, the 20 MA, somewhere in there, buyers should be willing to step up based on yesterday's move. And that all said, it's just a sloppy consolidation going on here. Dow led the way down and it led the way up. And we just got more slop going on here. Same application, look to the left. In this case, 3,600, the whole number, minor support. The pivot low down here at 35,900. But considering the strength of this move, the minor pullback, the continuation, this is an obvious area somewhere in here where buyers should want to step up and see if they can take it how much higher. Weekly time frame, same thing. This week's a consolidation within this giant up move. And the way it went down and came back up, historical patterns, which are always what they are, meaning we have to go back and look at what happens the majority of over time. This market has done some things that are out of the ordinary, and big, deep retracements that recover immediately, and big moves up that just fall apart immediately. So environments change, and that's one of the things that can play havoc with what we do at times, and we got to roll with it and adjust. Yes, same story there. We looked at that. YM is just a continuous contract. Now silver, I think a minor position here, a starter position, makes sense. We were looking at this as a potential breakdown bar failure earlier. That didn't continue, but it went down for good measure. Yesterday I said that maybe this is just a double kind of breakdown failure. Just was a thought at that time because of the support to the left, and we're getting a bottoming tail bar on the weekly time frame. And sure, you've got this congestion there, but these kind of flush moves, just look at charts as if you were in there and say, hey, you bought this at support. There was a bottoming tail bar. I think it'll bounce. What are you going to do? Right? You're going to get out of town, or you're in a hope mode that may just take you out of the game, because there's no guarantee it's going to stop going down. But the effect of that is to remove supply, where traders that are long hit the bid, they get out, and now whoever steps up here, it's coming up into there. So will this stop prices? And the reality is we don't know. But from the perspective of how I look at these things and interpret what's happening, I give it less of a respect, so to speak, as in, from when maybe it was being tested the first time because of this pattern. So we'll see. But, the way this is moving up, it makes sense to take a position, and it may congest for a while. So there are patterns that give you, let's say, immediate gratification. I mean, there are types of patterns that move fast and, they go your way immediately. Is this one of them? Probably not. And it's going to deal with this, and whether there are real people there or not, excuse me, that maybe they got taken out where they hit the bid. Longs are still looking at that. Like, we'll look at that and say, you know what? Doesn't make a whole lot of sense to go all in, because me and everybody else is looking at this with a thought of, hey, there's resistance right there. But why not put on a smaller position and just give it some room and let it do its jiggles? Gold has been holding up better. It's at the top of this congestion. We've got another bottoming tail bar, which is what I call a correction bar. It broke below the lows and it popped back up again. You got these converging moving averages in alignment with this pivot high. So there's resistance there as well. So is there a rush to get into this? I doubt it. You buy a pullback intraday if you're watching it, or, just share size it for down here and put on a small position. And, we may not use the futures. We're going to look at GLD. Same kind of thought process, just give it a whole lot of room. This is opening up. You can see the lines as I'm moving right up there near the top of the congestion. Maybe this pulls back and tries to fill the gap as well. Ideally, it doesn't. That would truly be a sign of strength, whether it's this or anything else. Anything that can gap up into resistance and not fill the gap is a sign of strength. Oil, not moving too much here. A sell setup, it isn't really going down, so I don't know. The way it came down, it's coming up, sat resistance over there. It's got a void. Let's see what it does. Again, if this turns out to be just a red bar ignored, a breakdown kind of a failure, consider longs. And this could be a place to be looking, where some of these things from yesterday that made these monster moves, some, whether it was Pfizer, some of these things like ranges that are like enormous. Doesn't make sense to be chasing them, but looking at what underperformed that could play catch up, like some of the oil stocks or some of the, mentioned the airlines, cruise lines, and FedEx. I think IWM can move. Look, this did exactly what I thought or hoped that it would do. Come down here, come down to the low, and move back up again. It's a classic type of a W pattern. Yeah, it came all the way back down. It was a breakout that completely failed. Will it stall up in here? I believe so. It's doing the same thing this morning where, it came up and now it's getting pushed back down. So there is some common sense or sensible traders, saying, what, that move yesterday was ridiculous. And, whoever took it overnight, taking their money, look over to the left, there's this resistance there. How are they going to deal with this today? This is the next step, in what occurred yesterday and putting it in the context of what's happening right now. What's the next step? What's it going to do? Does it collapse back down? It would make sense to have a bit of a consolidation. It is a big W. It's a giant W. So, those are the futures. And, YM, and this is, it already been up here. So coming down, well, that would be a lot to fill the gap, but, it is still in a downtrend. So, coming down to fill the gap, you can see the area right there on the hourly chart. And, well, it's not going to gap up to 220 anymore. It gapped up into this congestion. And now you can see It's moving down. It's moving down a bit. So will it fill the gap? Will it go sideways here? Will it go sideways and not fill the gap? And a 30-minute high is the way to go. That's what we need to figure out here in the morning, or just watch and see and decide. Do we want to take a position? With this bias of filling gaps and getting long. And if for some reason, sellers come in and just knock this thing down here, let's just say to 215, 216, it's like, man, what the hell happened? That's not what's supposed to happen. And that makes us reevaluate. So that's the process. VIX, coming down here, gonna go lower, sure. We talked yesterday about long-term lows in that, excuse me, interest rates coming down. This is good. This is a good sign, right? Which is a little weird, counterintuitive. It's like the Fed's going to start, quickening the tapering. They're going to increase interest rates, so they say, 3 times next year, and the 3-week Treasury bill yield is falling. Right? Figure that one out. Don't even try. Right? 5-year is coming down. The 10-year, well, it's just flat here. But what we want to see, right, is this to be stable. 5-year come lower, yield curve widen, which will help, financials that are pounded down. And, where is this? 61 and change, gapping up a little bit. It's in a downturn. There's probably better looking financials out there. But things that didn't move may be the place to go, rather than chasing what made the big moves. All yours, Dan.
Good morning. Yeah, yesterday was an incredible 3 p.m. rally, one that I haven't seen in many, many years. And, David started talking about Adobe, and I said, today's going to be tough. David, I think, said, oh, we're going to clean up today. I'm like, well, I can't say that because of this vertical move. And now it's going to be even harder. I was hoping for a small gap down and buying a 30 or 60-minute reversal period within a bullish retracement, but market didn't care about me. Closing at the high. Now it's gapping up to all-time highs. That's amazing. I said I would love a 1, 2, 3 on the spiders. Big monster inverse head and shoulders. So I have a big watch list from yesterday. I posted it in Telegram for those who said, get me long something. I gave you like 8 of them that look great. Let's look at, so our opens are fine. Let's look at some new trades. Credit spread. David, you know the drill. You know our checklist. It's a nasty gap. It's right here at the 200. It's a nasty pre-market. But to get over yesterday's high, it's going to be spready at the open. And, tell me what the juice is. All right, there was a lot of potential W bottoms. For some reason, this is actually gapping down a little bit relative weakness. Yeah, McGraw with his gamma gun was telling me the skew was to the bullish side. So, good job there, McGraw. AMC, little meme stocks have been getting beat up lately. This could be and I think it's going to be put spread heaven. It's just a matter of getting on and going through our checklist because a lot of things are so extended, obviously. But here's one. This would be a beautiful 1 DTE put spread. B key relative weakness, gapping under support. This is a bottoming pattern on the weekly. That's a bottoming pattern. It's been going sideways for a couple months. The 20 MA is starting to curl, but there's no reason to enter yet. And now with the daily, looks worse. I don't know what's up with old Beaky. Workout, workhorse, a lot of stocks like this that are potential W bottoms. Housing starts this morning. When I saw they were up, whatever, 12% versus 2.6, my immediate thought was, how can these people who economists have been doing this for decades be so far off? 12 versus 2.5, really? But anyway, it's not very liquid, but things aren't moving in housing. Held up pretty well though, with the threat of higher interest rates. And when I was watching the various news today things, I would say the consensus was people were scratching their heads saying, I don't understand this big rally. Steve Leisman and what's his name? The little guy. Shoot, I forgot his name. And then I even saw Judy Shelton, used to consult with Trump. Trump wanted to appoint her to the FOMC. She was bashing the Fed of just let the market forces work. And I agree with it. I think 100% of what she was saying. Rick, so the other guy, Rick is saying, take your medicine and get the hell out of the way, Fed. And, they're just concerned with appeasing Wall Street. I was shocked yesterday when, usually things like that are just political and you don't publicly say them. And when Powell yesterday said, yeah, I don't want to upset the stock market. I mean, you on the green room heard my shock. I'm like, wow. Jacopo Jackson. Yeah, for it's, the gap's a little bit big, but this is very bullish consolidation in the upper half. So yeah, that's definitely watch. So I got Adobe and Lem here. I'll put JXN on my other screen. Yeah, looks good. LSI was one on my list. Here, let me show you the ones on my list from yesterday. Where I said, if you want long exposure, these look great. LSI, NSC, kind of a bull flag. We talked about that. Let's see my Costco here. Costco, it's extended on the 15, but that is beautiful, beautiful. 1, 2, 3, red bar ignored, breakout to all-time highs. Looks great. Qualcomm bullish consolidation looks great. Plug, it's climactic. This is a gap and crap on the 15-minute chart, but nice fluid bar down, reversal. Crowd, a nice retest pattern here. We were looking for a foot spread for Friday, tomorrow, but that could be a foot spread for next week too. Charlie Foxtrot would have been a little continuation, gapping up 55 cents. ANET, I said I liked. Look at that. Well, I gave that to the green room on this afternoon breakout at 135. Wow. I wish I made it official, but daily, weekly in alignment, that was beautiful. Tandem. Let's see if we can get a 1, 2, 3. Tomo, a 1, 2, 3. All right, so those were on my list from yesterday. I think I got them all. Riven has earnings, I think, after the bell. Block was on that was on my list for put spread, but they don't have weeklies. Coin retest is on my list. Let's keep an eye on this, folks, for put spread for next week. That still looks great. I was waiting for today. Just in my history, I kind of just like